So let's welcome in a very special guest now. Nischal Maheshwari of Edelweiss is now joining us. Nischal, thank you so much for taking out time for us. It's really been a while that we've spoken to you. Can you just tell us about what has changed in this last 6-8 months? What do you think market is trying to price in, which is reflected with the sort of returns that market has given?
Morning, Pankaj. It's a privilege to come back on your channel. So what has changed in the last 6-8 months? I think one thing which has really changed across the world is the global growth which is coming back. So it is not alone basically that you're seeing the kind of growth in the US, but China, Europe. So US and Europe, when they started growing back basically, and they are the consumption baskets of the world. So when they start growing, I think the suppliers also start doing well. So you have started seeing that the exports have started picking up very strongly across the all emerging markets. It's not alone that the Indian exports are doing well, but I think all emerging markets are doing well as far as exports is concerned. And that has driven the whole market up. So growth is coming back, and this time when the growth has been very strong, the dollar has behaved pretty well. And you have seen in this time when the dollar went up, the emerging market currencies did not react negatively to that. So I think this is just largely because the growth is back in the system, and that's why we are seeing basically that the market has started pricing in growth back into, and that's why you're seeing the markets being up.
Right. So, we've seen demonetization happening that has led to a lot of surge as far as domestic liquidity is concerned. And a lot of strategists that we speak to always talk about, liquidity being high, that is taking the markets higher. But that's coming in for the reason that high growth is expected going ahead?
Demon has helped basically, as you've seen today, the domestic mutual funds are now getting almost around 3,500 rupees as SIPs. And that is really contributing a lot to the domestic liquidity. No doubt domestic liquidity has played its part, but I think if there wouldn't have been underlying growth and the expectation of underlying growth, I do not believe that basically that this kind of liquidity would have flown into the equities market. So I believe the underlying thought is the underlying strategy is the growth is back. And that's why you are seeing this kind of a surge in liquidity as far as funds are concerned.
Right. Till now, from the earnings that have come or from Q3 numbers, whatever you have done in terms of analysis, do you get a sense that that is reflected in the earnings of Nifty 50 or the top 100 companies as well, or it will come with a lag effect?
So till now, what the earnings have come out, I think has been slightly better as far as volumes are concerned. So whether it is the FMCG companies, whether it is the paint companies, whether it is the volumes from the banking side, volumes from the cement side, you see basically there has been a growth which has happened. Now partially it can be explained saying that demon quarter was a bad one basically, and people, the pent-up demand has come in the second quarter. So we have to still see that these volumes are sustainable or not. If these volumes are sustainable for a quarter or more, I definitely see that the economy is on a very strong recovery, especially on the industrial side. And that should be giving, I would say, a good thought to the market.
Right. In terms of earnings, where do you think the recovery will come in from? Do you think financials, which has so far led the earnings recovery, will continue to get that benefit or continue to lead the numbers on a YOY basis?
So 2 or 3 sectors, I think this time, besides the financials, it would be metals because they are coming from a low base. Plus, I think cement. That will also be driving the volume, industrial. So I think all the industrial companies basically, so industrial recovery it happens, I think all those guys are going to start showing good numbers in this current quarter and the next quarter as well.
Right. When you talk to your FII clients or your different big DII clients, do you get a sense that a lot has changed in terms of perception about earnings growth? So what were they thinking back in 2013 when there was an extreme sell-off? What they are thinking now, how they are investing now, that has changed. People are coming in with a long-term perspective into India.
So I think people are still more positive on the long-term prospect of the world growth actually, and they are saying that how much of that is populating down to India. Now, unlike what most people used to believe, I think in the early 2000s that India is more of a domestic story, I don't think so. That is now very evident. And exports is another one basically which is driving Indian growth. So if you look at it from minus 25%, you are up to around 17% kind of an export in the last 6 months. And that is also gives the confidence to the investors as well as the economy that the growth is coming back. So I think they are keeping their fingers crossed and expecting in the hope that the current quarter earnings, what we started seeing, they come back in a more sustainable way.
Right. So how would you position yourself, say, for the next 2 to 3 years? As you said, export-related companies which can benefit, these are the ones to focus on?
No, unfortunately, export-related companies have got their own challenges. So I would be, in case of pharma and IT, I think these are the two big export-related companies. Pharma has got its own specific problems basically. It is nothing to do with the export side basically. It is more to do with the US FDA regulations. So when you speak to any of these companies, you have no idea when these things are going to get sorted out. And I think that is playing a lot on their share prices. In case of IT, yes, I am much more positive on that sector basically. So one can definitely look at and build up positions on IT. And the whole market is underweight on IT. So I think that is also going to help. Plus there is going to be a economic recovery, cyclical recovery which is happening in the US also. That should help the IT sector. But the way I would suggest people to play is basically go back and look at the old industrial sectors in India, whether it is cement, steel, industrial products, so industrial goods, and consumption to an extent. So I think these are the regular 4 or 5 sectors one can look at and position themselves.
Right. Let's just talk about IT first. What is the call over there? People are underweight because the outlook seems to be very uncertain. What do you think will change for these IT companies going ahead?
So IT companies, there is a cyclical recovery which is happening in the US, and if you go back and look at it, there is a very strong correlation between the corporate profits of the US companies and the Indian IT companies' top line. And there is a lag of around 6 months. So we have seen that the corporate profit has started and changed dramatically in the US in the last 6 months. Given that the president out there is also positioning and pushing for major cuts in taxes, that will boost the profitability of most corporates in the US. I am very hopeful that the top line recovery in the Indian IT company is going to also be followed up pretty strongly. So that's our call on that basically, and we believe that there is going to be a cyclical recovery happening in the IT sector.
Right. A lot of headwinds regarding visa, how these people would get their employee force into foreign markets. You think companies would adjust to those changes, whatever, if and when they come?
I think so. It's already been discounted, rather over discounted and overhyped. The impact is not going to be as severe as most people expect. So it's more of a sentimental negative rather than actually on if you really work down the numbers.
Right. In terms of cement and steel that you pointed out, do you think cement is a better play for infrastructure rather than buying a traditional name like L&T, BHEL that gives you more certainty of earnings? That's why these valuations is what these companies are trading at.
So cement, I think the story is about demand and supply, and it's not an infrastructure play alone basically, because I think the 60% of cement demand still goes into housing. So it's also a very big play on the housing side, and given that government's focus on the housing sector and the affordable housing sector particularly, I think cement should be the one basically where you should have the overweight on cement. And that should give you a very good this thing. But you have to play both cement as well as the infrastructure companies, especially the guys who are manufacturing it. So Larsen and NCC and other companies basically should be there in your portfolio.
Right. Just when you talk about cement, aren't you worried about valuations, or markets are telling you that this is the new valuation for the cement business and they are likely to grow into double digits in the coming future?
So valuations is basically about what your future earnings expectation is, and I believe that the market is underestimating that. And given what government has talked about the affordable housing sector, I think there's going to be a huge surge as far as the volumes are concerned. And we have seen in the last quarter, everybody's been positively surprised with the volume growth in last quarter. So I think cement sector should continue to do well, is what I see from here.
Right. How else can one play this housing finance or this affordable housing story? Any other ways except the cement pack as well?
I think you have spoken just now. Housing finance is the other way one can play. And housing finance, I think there are some companies there, though the valuations are a bit stretched. But we like, I think some of those plays basically like LIC Housing Finance, Divan Housing are some of our top picks out there in the housing finance.
Right, but housing finance you feel is a perpetual business? It will continue to grow the way it has in the last 10-15 years?
At least for the next 1 decade, I don't see any issues.
Right. In terms of steel pack, as you said earlier, there is right now a lot of trade barriers that are happening globally. Can that change the call quite materially if it continues for more than your expectation?
Sorry, can you come back again on that question?
You mentioned about the steel stocks and how you think that they would lead to recovery. Do you think the trade barriers, a lot of talks about protectionism regarding trade barriers for steel and other metal products. Do you think, if that changes from here on, it could change the call on steel sector?
I don't think so basically, because if you really look at it, even the landed cost today is around 38,000 and the Indian steel market is quoting at around 42,000 a ton. So there is an underlying strong demand in the sector basically. So I don't see that the trade barrier, yes, it has played its part when the whole sector was decimated and there was not enough demand. But I believe today the demand is pretty good. And if you look at it even in China, the export prices are lower than the domestic market prices out there. So export they are doing at around $415 to $420 a ton, whereas the domestic market prices are $460. So what is happening across the world is basically the Chinese unviable steel demand, and because of the environmental issues, a lot of steel production is getting closed down, and that is what is driving the steel demand across the world.
Also, when steel stocks or steel companies, large steel companies tend to see better demand, their earnings grow much faster than estimate, the way they went down back in 2014-15?
Yeah, that's the operating leverage in play basically, because you got a high fixed cost. Once your fixed cost gets covered, everything flows down to your bottom line.
Right. So if the growth continues, then a lot of their debt problems, a lot of their capex, which was earlier being funded by debt, could actually get solved if it continues for the next 1 or 2 years.
Definitely.
Right. In terms of auto companies, what will be your call? So you saw Maruti declaring the numbers the way they are, but what would be your call on the entire auto pack?
So my preference is Maruti, ASHOK, LEYLAND and Hero Honda in that order.
Right. Amongst the two-wheelers, you think we see good growth from here on? How critical will the monsoons be?
So monsoons will definitely help as far as the two-wheelers is concerned, and that's why I prefer Hero Honda there. But is going to be, are we going back over 10-12% kind of a growth? I don't think so in a hurry.
What makes you so bullish about ASHOK LEYLAND? Of late, we've seen their sales suffer, especially post the demonetization. There have been a lot of worries amongst fleet owners, and those worries won't go away because of GST as well until the hurdles are papered over. Why are you positive on ASHOK LEYLAND?
So we have to actually start looking at some of the lead indicators, and one of the lead indicators we follow is basically the truck rentals. And this is the second month where the truck rentals are up by another 3.5%. So in the last 2 months, the truck rentals are up by around 7%. So definitely it gives you, and there is no increase which we have seen as far as the diesel is concerned. So definitely there is a very strong demand, underlying demand out there. Now we are waiting, saying that basically is it seasonal only or this is a sustainable number. If it is a sustainable number, I definitely see that there is going to be a good strong truck demand basically going ahead.
All right. You said you like industrials the most, and that is how you want to play on the recovery, economic recovery you're seeing. What about the consumption names? You mentioned the auto stocks that you like. From the consumption pack, how would you pick and choose? Do you think it will give you good returns from here on?
So consumption, I think some of the parts of the consumption are doing pretty well. So paint is in a case in point. Yesterday Kansai declared their result, and everybody has been very surprised at 14% volume growth. Now I think a part of it is basically because of the last quarter, but if I take 2 quarters also, last 2 quarters when one of them was a demon, they still grew at a 10% volume growth. Now that is that's a very good interesting thing basically to go out and look at it. 10% volume growth if you are doing double-digit volume growth, I think that's one sector basically one should look at, and they have been doing it for consistently, and we speak to the managements, they are still talking about this kind of same growth for the next 3 to 5 years. So I think that's another good industry basically one should be focused on.
What about some of the aviation stocks? They also moved up well. Crude has come off since say January this year, and load factors have been pretty high. Travel is back in flavor. Do you think some of the aviation stocks offer good investment bets?
So aviation to me at the moment still looks like more trading rather than has been an investment actually. Whenever the crude is down, you pick it up, and whenever the crude is up, you sell it off. So it's more of a, yes, the good sustainable part of it is that the demand is still growing pretty well. Now the issue remains to be whether their future capacities are going to get created on a sustainable basis or not. So that's what one has to take a call on basically, because last time when we actually figured out saying that the capacity is not going to grow, suddenly we found out that the domestic airlines have started working the night shift, and they went away from doing the last trip at 9 to doing the last trip at 10:30. So suddenly around 15% new capacity got added. So competition is severe. At the moment, yes, oil prices are down, and that's why everything seems to be good.
All right. From here on, do you think there are some concerns when it comes to some of the consumption stocks, especially those that are closely linked to the rural economy? Or do you think you expect the government to now start spending more and perhaps the rural-based stocks will do well from here on?
So everything seems to be doing well for the rural side. I think you are seeing that there is going to be a good outlook as far as the rainfall is concerned. Then some write-offs are happening by the government actually, especially in UP, and maybe some more will follow in because more states are coming to our elections. So there will be more money in the hands of the rural poor. So I think consumption should be strong on the rural side.
And would you then pick on tractor companies, seed companies? Where do you see maximum outperformance?
So I think FMCG should be once again favored out there. FMCG continues to do pretty well out there, and you have companies like Hero Honda, which is more rural focused. So I think those should be the ones basically one can look at.
All right. And when it comes to government spending, are you expecting a perceptible pickup? We've got 2 more years to the next general elections. Do you think the fiscal health could suffer of the economy? Would that be a big concern?
Spending, I think the budgetary impulse should be there strong basically. We have seen it in the last 1 quarter. And if you look at the order books of most of the construction companies, the road companies and all, I think looks pretty healthy. So this is all being driven by the government. So now the policy which they come out, especially on the affordable housing side, I think that's a very commendable policy. And so I think these are all being directed by the government policies. So I'm very hopeful that we are going to see substantial scale up as far as government expenditure is concerned.
Right. And where do you see this increase in government expenditure? You think it will be on creation of infrastructure? Will it be on will it be inflationary? Because previously in the past we've seen that when government spending picks up, when rural incomes also pick up, it becomes inflationary. Or do you think assets will be created and in the long term it will be better?
Sorry, I couldn't get the question.
You're expecting an increase in government spending. Where do you think the spending will be directed to? Do you think it will be inflationary, and will that impact the economy and the growth?
Oh, government expenditure, you're saying, is it going to be inflationary? Is that your question?
Yes, and where do you think the expenditure is going to be directed?
No, I don't see any reason to be inflationary basically, because so inflation and government expenditures are two different things. Unless government is crowding out private funding and the private industry, then I would only see that the cost of funds start going up in the country. But at the moment, if you look at the credit growth, it is less than 9%. So there is huge amount of money which is floating into the system, and government is not crowding out the private sector. So I don't see any reason for it to be inflationary.
Right, but then credit growth is anemic. People are not, there is not enough demand for credit. Is that a worry point for financials? What would be the levers for financials from here on, especially banks, given that problems of bad assets still continue?
Yeah, that is a worry basically. We have to wait and see how soon we get the demand back in the system. Demand has been particularly weak, and that's why I think you're seeing this kind of a credit growth.
So, how much of a problem is the bad assets? So, there is an expectation that the government is going to come out with something to fix this. What are your expectations?
I think the worst of the bad asset cycle is already behind us. There would be now the recognition only basically which needs to be done. So I think as far as the bad assets are concerned, I think we have passed the hump.
All right. Thank you so much, Mr. Maheshwari, for speaking with us at NDTV Profit, giving us your views on the stocks and the sectors that you like and where you see growth from here on. A pleasure having you with us on the show.